Good afternoon everyone and welcome back to the Moneycontrol live stream. You are watching the closing bell. I am Santosh Nair. Well, the downtrend in the market continues for the 6th consecutive session, both the Sensex and Nifty ending lower today. Auto and metal stocks were among the worst performing sectors. Mid-cap shares fared slightly better than their frontline counterparts. However, the broad trend continued to be lower. The India Volatility Index, also known as the Fear Index, fell by 5.9% to 14.17. Among the prominent gainers in the Nifty today, we had ONGC, Divi's Lab, Asian Paints, Adani Ports, Bajaj Finserv. While among the prominent losers, we had Hindalco, Adani Enterprises, M&M, JSW Steel and Tata Steel. So, metal stocks in particular were among the big losers. The selling pressure in the banking stocks eased somewhat today. However, market's disenchantment with PSU Banks continued. PSU Bank stocks were among the big losers today. In the case of PSU Banks, generally now the fear in case of the banking sector in general, the big fear now is that the net interest margins, which had expanded quite a bit over the last couple of quarters, now that is expected to normalize. That's because fixed deposit rates are set to go up, and as fixed deposit rates rise, the spread that banks earn between what they charge their borrowers and what they have to pay their depositors, that margin shrinks, and as a result of which the net interest margin will be lower in the coming quarters. However, analysts tracking the sector say that the credit growth story still looks pretty robust. So, that should be some solace for the bulls tracking the banking stocks. And let us quickly take a look at some of the stocks that were in the limelight today. Oil India, overall the stock was among the prominent losers for this week, falling by close to about 5%. This despite a positive rating and a price target upgrade by Morgan Stanley early on in the week. According to Morgan Stanley, Oil India is one of the best volume growth plays in the company in this sector. Morgan Stanley has raised the price target of Oil India from 253 rupees to 323 rupees. Now, so far the volume growth that has been coming in, they have turned out to be better than what the management had guided. And also Morgan Stanley feels that the government support is actually a bit underappreciated. The market is not actually recognizing that and feels that higher production volumes, also higher refining margins and average gas selling prices, these are some of the key triggers for Oil India, and this should increase earnings for Oil India by 1 to 10%. NMDC is the other stock on our watch list. The stock also came under selling pressure today despite the strong performance yesterday. Now, NMDC, the gains yesterday were largely due to the Supreme Court ruling that it can reclaim half of the contribution that it had made to the Karnataka Mining Environment Restoration Corporation. Now, earlier it was paying 20% of its revenues, mining revenues as contribution to KMERC, and now that rate has been set at 10%. So, that was the reason for the big rally in the stock yesterday. However, the stock has failed to hold on to those gains today. However, Motilal Oswal is bullish on the stock. It feels that it is well placed to capitalize on the growth opportunity in the sector. Also, the overhang of the steel plant capex that has been done with, providing more comfort on the core iron ore business. Besides that, capacity expansion is on the cards, and that should support volume growth going ahead. And the key triggers according to Motilal Oswal for NMDC are a strong domestic demand and exports of iron ore and pellets. Spicejet shares rallied close to about 8% today. Now, the big trigger was the CNBC News report that Carlyle is expected to convert its $100 million debt in Spicejet into a 5% stake. Also, Carlyle is planning to convert its dues in the form of completely convertible debentures in Spice Express, which is the cargo arm of Spicejet. And if this conversion happens through, then Spice Express will be valued at over $1 billion. Spicejet also announced its third quarter earnings today. Net profit came in at 110 crore for the December quarter versus 42.4 crore year on year. That's a jump of about 161%. Revenue growth, however, was muted. It just was about 2.4% higher at 2,317 crore. At the operating level, the Spicejet reported a net loss of 45.8 crore versus an operating profit of 116.3, and overall the company has Spicejet has sounded bullish and said that its loads has been going up over the last couple of quarters. Nestle is the last stock on our watch list today. Now, the stock had reported its third quarter earnings earlier during the week. Now, briefly, the stock spiked, but the market seems to be a little concerned about the margins. However, UBS is bullish on the stock and has a price target of 23,000 for Nestle, and according to UBS, the company will be focused on accelerating growth in the rural markets and product innovation. According to UBS, it sees revenue growth given increased capital expenditure. Well, and with that, it's a wrap on this episode of Closing Bell. Thank you for watching, and for all news, views and analysis, stay logged on to moneycontrol.com. We'll be back with you again on Monday at 9 a.m.